Mr. Mahmood Shamsher, welcome. So, as the CEO of Alif Finance, you lead an institution that sits right between the massive commercial banks and the everyday businesses that actually need credit, right? And you have the regulatory structure of a traditional bank, but the agility to move much faster when it comes to lending. So, and big banks can be incredibly slow to approve and distribute loans to small shops. And if SECP allows non-banking financial companies like Alif Finance to distribute loans using regulated stablecoins, my question is how much would that speed up the process of actually getting working capitals into the hands of a local shopkeeper?
Okay, fantastic, Ahmed. So, Ahmed, I think you've asked a really important question for the economy as a whole. And when we at Aleph look at it, by the way, I just want to make one correction. So, Aleph right now is focused entirely on consumer finance. So, our product is buy now, pay later. We work with merchants, whether it's for phone financing, whether it's for lifestyle financing. But the goal is to get credit in the hands of the consumer. This would allow us to build onto the solution with credit products for merchants, retailers, and their entire value chain. The specific question about our ability to do this at speed with stablecoin, I don't think our limitation is channels or the stablecoin itself. Where I think stablecoin would be a great advantage to someone like us is access to data. If we are able to find ways to tap into this data, if we are able to underwrite based on that information, our ability to scale credit for lifestyle products, for merchants, for retailers, and for consumers would multiply many fold. And I think that's where the opportunity lies. Even within this conference, we spoke about this from a regulatory perspective, from a tech perspective, and from the Rails perspective. It's all pretty much set up to support it.
Got it. Okay, so this was about the for your consumers, right? Customers. What the other question is about the investors, right? Basically, to give out more loans, companies like Ali Finance constantly need to raise their own capital, right? And so, do you see a future where Ali Finance could tokenize its loan portfolio, turning your local credit contracts into digital assets to raise money directly from global investors?
Again, Ahmed, great question. So I certainly think that any organization like ours will need access to very large amounts of liquidity. This liquidity has to be tokenized in some form. Our current focus is the issuance of sukuks, and this would allow individual investors to contribute. With the right kind of tech and tokenization, this would scale this down very quickly and allow anybody to make investments into the organization and earn fairly reasonable incomes on this. I think that tokenization and that tech stack will open up the market for almost any investor that they want. So it's certainly exciting space.
So thank you so much, Mr. Mahmood, for
Thank
your
you.
time and valuable insights.